Today, Bitcoin rockets back to $29,000. Binance US backs out of its deal to buy Voyager Digital. And Jenny Johnson of Franklin Templeton joins us from Consensus 2023 to discuss the firm's blockchain ambitions. Welcome to CNBC's Crypto World. I'm Tanea McKeel. The crypto market came back to life this morning with huge gains across the major digital currencies. By noon Eastern, Bitcoin soared a whopping 8% back to $29,000 as new worries around the survival of First Republic Bank brought the banking crisis back into focus. Ether rising too to $1,900 and Solana rose to $23. Okay, let's talk about the top stories. First, Terraform Labs co-founder Daniel Shin was reportedly charged in South Korea. According to Bloomberg, Shin was indicted on charges of violating capital markets law. 9 others faced criminal charges as well. Officials reportedly called the algorithmic stablecoin project a fabrication from the very beginning and said it was impossible to get the algorithm that stabilized Terra USD right. These charges for Shin come as the U.S. and South Korea battle over extradition of Terra co-founder Do Kwon, who was arrested earlier this year in Montenegro. Next, Binance US is backing out of its plan to buy Voyager Digital. According to Reuters, the U.S. arm of Binance cited a hostile and uncertain regulatory climate here in the U.S. as the reason for backing out. The SEC objected to the deal back in February, saying it was investigating whether Voyager sold unregistered securities. Now that the deal has broken down, lawyers for Voyager say the bankrupt crypto company is still entitled to a reverse termination fee from Binance US and a $10 million good faith deposit the exchange had already given. Finally, the Bahamas wants to tighten its crypto rules after the collapse of FTX. The country's Security Commission today announced the Digital Assets and Registered Exchanges Bill of 2023, otherwise known as DARE. The bill looks to expand the number of digital assets activities that fall under the Commission's purview and lays out fresh customer protections on custodial wallet services. DARE also lays out clear rules for staking services in the country. The moves come as companies look to expand outside the U.S. to avoid federal regulators' crypto crackdown. All right, on to our main story. Consensus 2023 is underway in Austin, Texas, and I took the chance to speak with Jenny Johnson, the CEO of Franklin Templeton, about the company's new investment in the Polygon blockchain, which she just announced at the conference. You're at Consensus in Austin. What is the mood like there? It has been such an interesting and eventful time in crypto. Even in 2022, when things were kind of feeling bad, it was still an interesting time. So is this your first Consensus? And, what's the mood like in Austin right now?
Well, so it is my first time at Consensus, and I have to tell you that it does not feel like crypto winter at all. I think you got a lot of really excited people, interesting companies here that have been built on the blockchain, and just a lot of enthusiasm.
So Franklin Templeton has a couple of announcements at the event. I do want to get to those in a second, but I want to take a step back. I think many people, many CNBC viewers specifically, might be surprised to see a Franklin Templeton presence at this conference. Can you tell me a little bit about when the firm got into crypto and why?
Yeah, so Franklin Templeton in 2022 celebrated 75 years, and you don't make it and thrive as a company for 75 years unless you innovate. And we fundamentally believe that blockchain technologies can be very important for asset management, frankly, for all financial services. So making sure that we're continuing to evolve, we actually started, I think, as early as 2017. And since then, we have launched an OnChain Money Market Fund approved by the SEC. We have several crypto strategies that we do fundamental research on. We are node operators. We have a venture capital fund. For our money market fund, we've actually built an entire transfer agency system in the Stellar network. So we're very enthusiastic about this space, and we think it's very important for asset managers.
Yeah, clearly. Tell me a little bit more about the money market fund. I want to get into what's actually in the fund and the performance and everything, but you mentioned Stellar. So why is it on the Stellar blockchain? What got you guys there, and why is that beneficial for investors?
Well, actually, when the team selected the Stellar network and the Stellar chain, it was really because of the proof of stake nature of Stellar. And that was before you had all the noise about the massive energy consumed by the proof of work. So they had the foresight to say we wanted to be in proof of stake. And it's been a great partnership.
Yeah, there really was a moment in crypto where a lot of people were very angry about the energy consumption. And I know for institutional investors that have been crypto curious, shall we say, that has been a really big obstacle for them. You are in that world surrounded by institutions. How do you feel that vibe has changed, today, April 2023?
Well, I think it's still a legitimate concern that people have, and you see it by the fact that Ethereum moved from proof of work to proof of stake, which, by the way, is one of the most impressive, IT re-architecture that happened, proving out this concept of, there was no project manager. I used to run an IT department, so something that massive would have stressed any big company out. And the Ethereum merge, where they went from proof of work to proof of stake, happened essentially overnight, years in the works, and every level 2 company that was built on Ethereum got the benefit of that with really no expense. So I think you're seeing a real fundamental move to proof of stake, trying to move away from the energy consuming types of platforms.
Okay, so you sound very, interested and knowledgeable about the technology. What about the assets themselves? I mean, is there crypto in the fund, or is it just that it's being processed over this technology? And while we're at it, what is actually in the fund?
Okay, so it's a traditional money market fund that invests in U.S. government securities, but the shareholder record, what we call the transfer agency system, and the actual transactions are recorded on the Stellar chain.
You're also announcing now that it's going to be on Polygon as well. So, I know that this won't be anything you haven't already said, but again, why Polygon and why now?
Well, I think, and it's exciting, we announced today that we've actually expanded the money market fund to include a level 2 Polygon, which sits on the Ethereum platform. And one of the challenges in the blockchain world is the fact that you have these independent platforms and they don't operate, the interoperability is complex and you don't have it in a lot of places. So if you're on one space, it's hard to then be in another ecosystem. So we look at a money market fund, it's really important that we be able to operate across a lot of chains. And so our first one, and it was Polygon, and we're really excited to be able to offer our money market fund on, to any of the users on the Ethereum and using Polygon.
Moving forward, what does Franklin Templeton's ambition around crypto look like? How are you building that out? And is that something you're trying to do in-house, or is it through partnerships with networks like Polygon and Stellar? How are you hiring for it? There's, how much of a tech overhaul are you looking at here as you move forward with these crypto plans?
For Franklin Templeton, the answer is all of the above, right? We work with partnerships, we're doing our own development, we have a large digital asset team. What we do is we manage, investments for clients. And so we're looking for unique investment opportunities. This is a massive ecosystem for investment opportunities. We have to deliver those investment opportunities in whatever way our clients want to receive it. We think tokenization is going to open up new and interesting investment opportunities. And honestly, I think I could see one day where an ETF is actually just tokenized. Because if you think about an ETF today, the ETF, although it trades during the full day on the exchange, it only prices twice a day. Well, the smart contract in a token can make sure that you have the fundamental asset value at the time you're transacting on that ETF or that token. So we think blockchain just makes a much more efficient delivery, ultimately, of investment products. And that's the business we're in, so we have to make sure that we're evolving with this ecosystem.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, so we'll see you then.